Right, Bertels, and the last thing for today, I'm going to send you the lesson of the fiscal policy. The lesson will be in your textbooks. We are on page 62. I'm going to split this lesson into two parts. So I'm doing the first part of this lesson today, and then the last part, and then the final lesson for this chapter I will do tomorrow. Okay, so after tomorrow, we are basically going to be finished with chapter 3, except for one or two activities that obviously we will only be doing next week. I send you an activity today. Today's activity includes an essay question, so I will not be sending you another activity tomorrow. Right, so you can do that activity between today and tomorrow. You can finish activity 3.4 because it includes an essay question, so it's going to take you a little bit longer. All right, so your next activity will only receive on Monday. Right, so if we look at the next section, the fiscal policy, remember I did say in class at some point also, the word fiscal refers to financial. It means financial. So the fiscal policy is basically the government's financial policy. We have done little bits of fiscal policy, obviously in chapter 2, when we related it to the business cycle. Now we're going to relate this obviously to the government itself. Okay, so there's way more detail here than what there was in chapter 2. Okay, so first of all, the definition is always important. What is fiscal policy? Fiscal policy is the government's policy regarding the nature, the level and the composition of government spending, taxation and borrowing. All right, so fiscal policy is basically the policy where the government indicates to us what they are going to do, changes that they're going to make in terms of their government spending, which is their spending obviously, taxation, which is their income, and then their borrowing needs. Okay, now the government will use their fiscal policy to reach their objectives. Okay, remember, I think it was last week sometime, or earlier this week, I sent you the lessons on the objectives of government, those 5 objectives, which is a high and sustained economic growth rate, a full employment of production factors, price stability, exchange rate stability and balance of payments equilibrium, and then the last one is a more equal distribution of income. Right, so when the government makes changes to their spending and to their taxation, they are trying to reach those objectives. Now, they don't just change them to be funny. They change them, they make changes because they feel that the changes will help them to reach their objectives. Okay, now the main instrument of the fiscal policy is the budget. We did the budget lesson yesterday. Okay, it's in the budget where the government indicates to us what is going to happen in terms of taxes and where do they plan on spending that tax money. All right, so the fiscal policy of the government is basically embodied in the budget. If you want to see the fiscal policy of the government, all you need to do is just to look at their budget. Right, the main variables, the instruments that is part of their fiscal policy, and those instruments that they can play with in order to reach their objectives will obviously be their government spending, the taxation, and their borrowing, public debt. Okay, now the first thing that you need to know, and remember again, this is not an essay question, this is just for short questions, dart response questions, 8-mark discuss questions, right? Features means characteristics, So the fiscal policy has 3 characteristics. The first one, it is goal bound. This means that when the government is using their instruments, they are trying to reach their goals. As I said, they don't just change taxes just for the fun of it, to mix things up in the country. They are changing taxes if they feel that those changes are going to help them to reach their objective. Okay, so the central government, through, remember I said yesterday, every budget, they will identify certain priorities. Now, what are the priorities this year in terms of the budget? All right, so when they've identified what are their priorities in terms of economic goals like a full employment, like economic growth, social goals like a redistribution of income, obviously they use the budget as an instrument to reach these goals. And provincial and local government, remember, it is the national government that comes up with the budget in terms of the National Department of Finance, obviously, okay, through the Treasury. And then once the budget has been announced, obviously the provincial and local governments will receive their allocation. Remember the conditional grants and the equitable share that we discussed yesterday. All right. And then when their budgets are approved, provincial and local governments are supposed to execute approved budget goals. Certain of their requests would have been approved, certain requests would not have been approved because it didn't fit in with the priorities of the government for that year. All right, but basically when they make changes to the budget, they use this budget in order to reach their goals, to help them to reach their goals. Right, secondly, second characteristic, your fiscal policy is demand biased. All right, remember way back in chapter 2, we said that fiscal policy and monetary policy are demand side policies. Okay, that is basically what this means. Demand biased means that your fiscal policy is a policy that is used in demand side policies. It has a bigger effect on the demand side of the economy, bigger than what the effect that it has on the supply side of the economy. Right. So fiscal policy is a demand side policy. If they make changes to government spending or taxes or whatever, it will have a greater effect on demand and only an indirect effect on supply. All right, remember we did discuss that. Your supply side measures would be, for example, reducing the production cost in terms of reducing the cost of infrastructure, etc., etc. All right, they can use taxes as incentive. Okay, we spoke about subsidies to reduce production cost. So it does have some effect on the supply side, but the major effect will be on the demand side. Okay, and then the last characteristic is that it is cyclical. Right. Obviously, we did discuss the fiscal policy when we did the business cycle because the business cycle has a direct effect on fiscal policy. Between the business cycle and fiscal policy, what is happening to the business cycle will inform what they are going to be doing with the fiscal policy. All right. So obviously during an expansion phase, your recovery or your boom phase, income and profit levels will be increasing. Money, businesses are realizing profits. Obviously that is going to result in a higher income. So automatically during the expansion phase, the government will receive a higher revenue in the form of income tax as well as taxes on profits. When businesses make more profits, remember businesses have to pay companies tax, corporate income tax on their profits. So in the expansion phase, when businesses are making a lot of profit, the government will also be receiving an increased amount of corporate income tax. Right. Obviously, the opposite is going to happen during a contraction. Right. During a contraction phase, when people are losing their jobs, people are not earning an income anymore. And if you don't earn an income, you are not paying income tax either. So the government will see a drop in the revenue that they receive from income tax. Same thing, because people don't have an income, they also will not be spending a large amount of money, and businesses will see a drop in their profits, possibly even losses. Obviously, if businesses are not making profits, they also do not pay corporate income tax. So again, the government will see a drop in the income tax that they receive. Right. Now, what we see is that when we look at fiscal policy and the business cycle, this last point is very important. Fiscal policy is implemented anti-cyclically. Right, so if the business cycle, in other words, if the business cycle is going into an expansion, we are going to be using restrictive fiscal policy. That's what it means, anti-cyclical. If the cycle is going up, fiscal policy will push it down. If business cycle goes into a contraction, fiscal policy will be anti-cyclical. It will push the economy up. Expansionary fiscal policy. All right, we did do this in chapter 2. Right. So obviously when the economy is going into a downswing, we want to stimulate the economy, and we do that by using expansionary fiscal policy. Cycle going down, fiscal policy push up, anti-cyclical. So opposite direction really. Right. If we look at the composition of fiscal policy, obviously we are going to look at the government spending, we're going to look at government revenue, and we're going to look at public debt. All right, remember we did say yesterday when we did the budget that in our country, the government is always, when they budget, they always are left with a deficit on the budget. Their spending is always more than the revenue that they receive, and therefore, obviously, they will always have that public debt, the deficit in terms of the budget. All right, now if we look at the government spending, the reasons for government spending, why does the government need to spend money in the economy? First of all, they need to provide goods and services to members of the public, right? There's certain necessary goods and services that they provide free of charge. Okay, like for example, public health care that is provided free to people that qualify for that. We've got no-fee schools where some people receive an education for free. Some services are subsidized, okay, like your education is subsidized, okay, because you still do pay school fees. Water and electricity is subsidized, okay. Remember, every household receives 6,000 of liters of water for free every month, also 50 kilowatts of electricity. Okay, those are subsidized services, right? So there's certain goods and services, obviously public goods and services, collective goods, community goods, and merit goods that the government needs to supply. And those public goods and services don't just fall out of the sky. The government spends money. The government is paying the doctors at the public hospitals. The government is paying the teachers at the public schools. They spend the money in order to provide those services. All right. Second reason for government spending is that they want to redistribute income. All right. How they spend their money will have a distribution effect. Right. So basically, we have a progressive tax system. Remember, where wealthier people in higher income groups pay higher percentages of taxes, and that money that the government will receive, they use that money to provide goods and services to low income groups more so than the high income groups. They use that money to pay out social grants. Yes? Paying out social grants is literally meaning we're taking the taxes from the rich and we're giving a cash benefit to a poor person. Okay, there's no clearer example of redistribution of income. Right, the next reason is they want to influence aggregate supply and demand. All right, so obviously it goes hand in hand, as we said, with the business cycle. If the business cycle is in that boom phase, the prosperity phase, and the economy is busy overheating, the government will use their fiscal policy, they will use their spending to slow down the economy. Restrictive fiscal policy, they will decrease their spending. When the economy is going in a downswing and we're reaching recession, depression, obviously the government will want to bring us out of that contraction phase, and they can use their government spending as an injection, right? If they increase their government spending, they can bring us out of that downswing. Right, it's also important, next reason, for them to pay interest on government debt. Right, as I said, our government budgets for a deficit, they know they are going to spend more than what they are going to receive. So obviously, whatever money they borrow, whether it's from the IMF, whether it's from the World Bank, whether it's from normal banks, whether it's from another country, it doesn't matter. Any money that they borrow, same as what we pay interest, the government also has to pay interest. So the interest on their debts of the past has to be paid. Now, it's part of government spending, right? Remember that top slice that we spoke about yesterday. Lastly, also they have to pay off government debts. Remember, when they borrow money, it is not a gift. It still has to be repaid. All right, so both the interest and the government debt that has to be repaid, previous debt and interest that has to be repaid, that forms part of the top slice that we discussed yesterday. Right. Now, one way of measuring the size of the government in the economy, a very popular way to measure how big the government is in terms of the economy, okay, how big is their involvement in the economy, is we are going to calculate the government spending as a percentage of the GDP. Okay, remember your GDP calculation, right? Way back when, chapter 1, it feels like a lifetime ago, right? But GDP is C plus G plus I, all right? So if C plus G plus I, the G is your government spending. All right, so if you take the size of the government, you are literally going to calculate government spending as a percentage of the GDP. And that gives you an idea of how much of this GDP is actually created by the government. Okay, now your government spending is classified in different ways. Okay, we are specifically going to look at the functional classification and the economic classification. We did look at this last year as well. So this is basically revision. All right, your economic classification divides government spending according to the type of spending. Now, what type of spending is the government doing? So there's a distinction made between current payments, transfer payments and subsidies, and then payments for capital assets. All right, the current payments would include any wages and salaries that they pay, any goods and services that they buy, and interest on their public debt, right? Those were all examples of current payments. So they are paying teachers, they are paying doctors, they are buying textbooks for schools, they are buying the medicines, they're buying stationery for their offices, goods and services that they are buying. That is all part of their current payments. The second one is their transfer payments and subsidies. Okay, subsidies could be like for the provinces. Okay, remember the provinces also is allocated a certain amount of money as well as the municipalities. So any transfers or subsidies that they're paying towards the provinces and municipalities in order to help them run more efficiently, that'll be part of this section. And then very important, subsidies like, for example, to schools, all right? Because remember, every public school receives a subsidy. Obviously, if schools in poorer areas receives much higher subsidies than schools in more affluent areas. Like our school receives a very small subsidy per child because the government determines that because of the area that the school is situated in, parents who send their kids there will be able to pay school fees. Okay, so we receive a very small subsidy from the state, but we still receive a subsidy. Okay, universities, although universities receive subsidies in the same way as schools. Right. Households, obviously, their transfers will include the social grants, child grant, the disability grant, UIF, all of those are transfer payments. Okay, remember, we said transfer payments are payments that the government makes without receiving goods and services in return. All right, so they are giving a household a social grant, they're giving a mother a certain like 400 odd rand for the child because, and not because she's working for the government, it is money that they give without receiving goods and services in return. Okay, so all the grants will be part of transfer payments. The last category is payment for capital assets. All right, in other words, this is where they invest in infrastructure, fixed assets that the government is buying or maintaining or anything like that. The buildings that they own, machinery, land, anything like infrastructure-wise will be capital assets. Okay, the functional classification will be more familiar to you. You've been doing this since grade, yes, like 8, I suppose. All right, so the functional classification is about dividing government spending according to the nature of the service that they are providing. All right, so which functions are the departments performing? The nature of the service that they are providing. All right, again, there's 4 categories. There will be spending in general government, then protective services, social services, and economic services. The smallest spending category, percentage-wise, will be the general government, and this includes any money that they have to spend to run the country, the general administration of the country. So ministers' salaries and stuff will go in here. Whatever money they spend in order to do their job, to run the country, that will fall under general government expenditure. Okay, as I said, this is the smallest expenditure category percentage-wise. Right. The protective services, obviously this includes spending on the defense force and intelligence, the police force, prisons, the whole justice system of courts, right? So this service relates to the function of the government to provide social order and stability. Law and order is provided by the police force, right? Police force is there to protect the rights of the individual, right? So people will feel protected, the citizens will feel protected, their right to ownership will be protected, right? The prison function and the judicial system is to remove criminals from society and to rehabilitate them so that when we set them free again, they become contributing members of society. It doesn't always work like that, unfortunately. All right. And then obviously the defense force is to protect the state against external aggression. At the moment, with this coronavirus thing, obviously they are using the defense force to assist the police force to maintain law and order. They're protecting the government, they're protecting the rights of individuals. Normally, the defense force is not there to protect citizens. They're there to protect the state, the country, not the government, the state, the country. That's why during times of election and whatever, you will always see the defense force. All right. Or if there's external aggression, if there's a war about to break out, that would be the defense force's job to protect our country. At the moment, as I said, they're also helping to protect the citizens. They're helping to maintain law and order because obviously the police cannot do it by themselves. Right. And protective services is the second largest spending component. Right. The biggest one is the spending on social services. Right. Social services literally is where the government takes the tax money and they spend that tax money in order to improve the livelihoods of the people. It's money that they basically plow back into the people of the country. All right. So it'll include spending like education, public health, social security, the welfare payments, housing, to provide housing to those people who cannot afford to buy a house themselves, community development, youth centers, anything that the government is doing to improve living standards for the people in the country. All right. Human development. They want people to have better livelihoods, living standards, prosperity levels of people, to make the lives better of the people that is living in this country. All right. And social services, as I said, is the largest spending category by far. Right. More than 50% of the budget every year is allocated to social services, and it's the way it should be. Right. The money that the taxes should be used to benefit the people of the country. Okay, the last spending category is your economic services. All right, this includes, for example, spending on water schemes and related services, agriculture, forestry, fishing, mining, any economic services, where the government is physically involved in the economy as an entrepreneur. All right, so economic services, for example, every time they bail out Eskom or SAA, those money that they allocate for those things, that will fall under economic services. The government, the parastatals are actively participating in the economy. Okay, so this is where the government physically gets involved in the economy, where they physically produce goods and services. All right. So this category will reflect the objective of the business to create economic growth. They want to increase our productive capacity so that economic growth can increase in the country. All right. And make the efficiency of production better. Any kind of infrastructure here. You can see there, if you look at that list, water schemes, water pipes, and to make water provision available to people, that's infrastructure. Right. Fuel and energy, electricity, whatever that is, infrastructure. Mining, it's infrastructure. Transport, it's infrastructure. Right. So obviously, it is there, the spending on economic services is to help the country run more efficiently, the country to run better. All right, so that we can have economic growth and ultimately economic development as well. All right, you'll see this last point here. If the economy grows, we will discuss this in Module 3 a lot, okay? But we have to have economic growth first before we can have economic development. Okay, economic development means that there's an increase in the standard of living of the general population. All right, but when the economy is growing, that means more goods and services are produced. Okay, remember, economic growth means there's an increase in the GDP. So we have produced more this year compared to what we have produced last year. All right, so when we are producing more goods and services, in order to produce more goods and services in businesses, obviously there needs to be higher employment. We need more production factors if we want to increase our production. And one of those production factors is obviously labor. All right, so as we produce more goods and services, more people are employed and more people will be earning an income. More people earning an income means that more people will be able to satisfy their needs and living standards will increase, which means economic development. Right, the second component of the fiscal policy is the government revenue. All right, so revenue, as I said, I alluded to yesterday in the budget lesson as well, is that there's different forms of government revenue. We always talk about the taxes. Obviously, taxes is the government's biggest source of revenue, but they do have other sources of revenue as well. All right. So the first one that we are going to look at, obviously, is taxes, because it is the most important one. All right. Well, your definition of a tax, okay? Taxes are compulsory payments that is made by individuals or organizations to the state to fund the functions of the state. All right. So remember, taxes are compulsory. It's not a voluntary thing. Okay, if the government determines that you should be paying your taxes, it is a compulsory payment. It's not optional for you to decide whether you want to pay it or not. All right. So taxes are compulsory payments that is made by the people in the country, individuals, households, as well as businesses, so that the government can have money available to perform the necessary functions, okay, like the provision of public goods and services. All right. As I said, taxes is the most important source of revenue for the government by far, and it is administered by SARS, South African Revenue Services. If you don't know that, write it down. SARS, South African Revenue Services. That is the government organization that is responsible for collecting the taxes. All right. Reasons why the government imposed taxes. First of all, obviously, they need money if they're going to spend that money. We just looked at the reasons why it's necessary for the government to spend their money. Obviously, they can't spend money they don't have. They must first earn the revenue before they can spend. So taxes is important because it enables the government to earn the revenue that they need to perform their functions. Right, the second reason is that they can use a tax to discourage the consumption of demerit goods. All right, so if we discourage the consumption of demerit goods, like for example alcohol, like cigarettes, like sugary drinks nowadays, okay, that is called a sin tax or an excise duty. Okay, the sin tax or an excise duty is those taxes they levy on cigarettes and alcohol to make them more expensive. And because it increases their prices, law of demand says, the higher the price, the lower the quantity demanded. So because they add an excise duty onto the price of cigarettes and alcohol, it is making cigarettes and alcohol more expensive, which means, or the hope is, in theory, less people would buy them. It doesn't really work like that. Now, I've never met a person that says, oh, the taxes on us are so high, I'm going to stop smoking. It never happens, right? But at least then the government earns that revenue. These taxes is a choice, right? If you do not want to pay the sin tax, you don't buy cigarettes and you don't smoke. You don't buy alcohol and you don't drink. It's not like income tax. Everybody has to work to earn an income. So that tax is not really voluntary. That it's a must-have. But with the excise duties, it is a people's choice to buy these goods and services. If you choose to drink, you choose to smoke, you choose to pay the tax. It's one of those things. All right. Remember, demerit goods, we say demerit goods are those goods that are deemed bad for society. Okay. Demerit goods have negative externalities. Right. Because it has negative effects on other people, not the person that drinks, not the person that smokes. It has negative disadvantages for other people. That is why it's called demerit goods. And because it also has effects on other people, that is why we want to discourage them. All right, and we do that by making them more expensive by adding that excise duty. All right. The third reason there is to convert external costs into private costs. Okay, you will not understand this one at this stage. We are going to, in chapter 8, look at external costs and private costs. All right, I'm not going to explain this now because you're not going to understand this right now. All right, if we move on, to discourage imports of certain goods, we use import duties or customs duties. Same thing. Same thing as with the demerit goods, right? Remember we said imports are leakages. The more we import, the more money we are sending out of this country, the less money is available in our country to develop our own country. We want people to rather support local industries. So to discourage imports, we allow the imports in, but then we slam them with, again, a tax. An import duty or a customs duty is a tax that is placed on top of the price of imported goods, once again to make them more expensive. And same thing, something that is more expensive, people are less likely to buy if it's too expensive. If people now see that the local goods are cheaper and the imported goods are more expensive, people might actually rather buy the local goods. We are trying to discourage people from buying imported goods. All right. The next reason for the tax is to redistribute income. All right, as I said, we use the progressive tax system where higher income groups pay more taxes than lower income groups, and because they take money from the rich and then obviously pay transfer payments, your social grants, whatever, to lower income groups, it does have a redistribution effect. All right, they do tax wealthier people more than poorer people. All right, so it has a redistribution effect. And then lastly, same as with government spending, it is part of fiscal policy, or taxes is part of fiscal policy. So it also is used to influence aggregate demand or supply. Okay, so once again, if we are in a downswing and we want to stimulate the economy because it's counter-cyclical, we will decrease taxes because taxes is the leakage. If we're in the upswing phase, we're at the boom phase, the economy is overheating and we would like to slow down the economy, we will increase taxes to decrease people's income. All right, so we can use taxes as a tool to influence demand and supply in terms of the business cycle. Right. Now, we distinguish between two types of taxes. we have direct taxes and we have indirect taxes. All right. Your direct taxes will be taxes on wealth and income. All right. So your definition is there, it's taxes levied on the income or capital of an individual or business enterprise. Okay. Direct tax, taxes levied on the income or capital of an individual or business. Right. Examples, pay as you earn, that is income tax. All right. All people that earn an income pays pay as you earn and cite. Okay, standard income tax as well as pay as you earn. Right. Capital gains tax. Okay, and as I'm not going to explain this too much, again in module 3, we are going to look at in more detail at all of these taxes. But capital gains tax is a relatively new tax that you have to pay if you sell an asset that is increased in value. All right, so for example, if you have a holiday house, not your first house, your holiday house, a second home. Everybody deserves a first house, right? Capital gains tax is a wealth tax. So if you own a holiday home that you bought for 1 million rand and 10 years later you sell for 2 million rand, that R1 million profit that you are selling it for, that is going to be taxed. Okay, you're paying capital gains tax on that amount. All right, it is a wealth tax. Companies tax is the taxes that businesses pay when they make a profit. All right, so any business that is realizing a profit, they have to pay companies tax. When they make losses, they don't pay. All right, now with a direct tax, the person or institution, okay, so the person earning the income or the business making the profit, on whom the tax is levied, must make the tax payment to the authorities and it cannot be shifted. All right, that is one of the big characteristics of a direct tax. If you are earning the income, you are the one that has to pay the income tax. If you gained, your capital asset gained in value, you must pay the capital gains tax. If you as the business made the profit, the business must pay the tax. It cannot be shifted onto somebody else. Your indirect taxes can be shifted. I'll explain that now. All right. Now, when you do income tax, we are saying you on whom the tax is levied, you are the one that has to be paying it, right? But the way it works in our country, your income tax, cite and pay as you earn, is deducted from our salaries by the employer. That's just how our tax laws work. You can imagine if my employer gave me my income and now told me, okay, but you must remember now, you must go and pay your taxes. Nobody was going to pay their taxes then, right? So the government knows they have to deduct the taxes before we even receive our income. All right. But the employer that is doing that deduction is just the agent of the government that is doing it on the government's behalf. It doesn't mean that the employer is paying the tax. Us as the employees, we are paying the tax. The employer is just the person that is deducting it, that's taking it from us and paying it over to SARS. All right. So whether it doesn't depends on obviously how you earn your money. Your income tax will be deducted daily if you earn your wage daily, or weekly if you earn a weekly wage, or monthly if you earn a salary, right? Depending on when you get paid. As you get paid before you even get your income, they have deducted your income tax already. All right. That's the only way that the government is going to ensure that they actually physically get their income tax money. All right. But just remember, the person who earns the income, that is the person that is actually paying the tax. Even though it's not us walking to SARS and giving them the money, we give the money to our employer and the employer will pay it over to SARS. The employer is just the middleman. All right. The second type of tax is your indirect taxes. Okay. Indirect taxes are taxes that is levied on the sale of goods and services. All right. So included in this category will be your VAT that we pay on most of the stuff that we buy, those excise duties, sin tax on cigarettes, alcohol, and what's. Your fuel levy, there's a fuel levy as well, that's an indirect tax. Every single time that you put in fuel, the fuel levy is part of the price that we pay for the fuel. Or departure taxes if you fly, it's a service that they are providing. That is also an indirect tax. Customs duties is an indirect tax. All right. Now, indirect taxes can be shifted onto another person. All right. I want you to listen to me very carefully now. Okay. So if the farmer Yeah, the farmer, let's say, is the first person in this line. If the farmer manufactures the wheat, he plants the wheat, he harvests the wheat. On everything that he buys, the seeds, okay, when he buys the seeds of the wheat to plant, the seeds that he's buying, the price of those seeds will include VAT. So he pays the VAT, and then he goes and he plants the seeds. When he harvests the wheat, he's going to sell the wheat to, I don't know, the bakery, the flour company, okay, the flour company. He sells the wheat to the flour company. When the flour company buys the wheat from the farmer, they pay VAT. So the farmer is getting his VAT back. All right, he paid VAT for the seeds, but when he sells the wheat, the VAT is included in there, so he gets the VAT back. He paid it, but he's getting it back. All right, the flour factory, they pay the VAT, they take the wheat, they turn it into flour, and when they sell the flour, it includes VAT. So they paid VAT when they bought the wheat from the farmer, but when they sell the flour to the bakery, they're getting their VAT back. Ultimately, they're not paying the VAT because they're getting it back. Okay? The bakery pays the VAT when they buy the flour. They bake the bread and they sell the bread to Pick n Pay. Okay? Pick n Pay pays the VAT to the bakery. The bakery paid their VAT when they bought the flour. When they bought the wheat, when they sell the flour, or they sell the bread that they've now baked, they sell it including VAT. Okay? So they get their VAT back. They paid it, but they're getting it back. The Pick n Pay pays the VAT when they buy the bread from the factory, from the bakery, and when they sell the bread to us, it includes the VAT. Okay, brown bread doesn't include VAT because it's essential services, essential goods, but white bread does include VAT, okay, because that's not seen as essential. All right. Ultimately, when Pick n Pay sells the bread, they sell it including VAT. So us, the consumers, when we buy the bread from Pick n Pay, we are paying the VAT. Pick n Pay gets their VAT back because we pay them, all right? Because we don't sell the bread again, we cannot shift the VAT any further, all right? Everybody in the line of production pays VAT and get it back. Pays VAT, gets it back. Pays VAT, gets it back if they sell again. But the consumers, us as consumers, when we buy the goods at the shops, we are paying the VAT to the shops. We are not selling it again, so we do not get our VAT back. Okay? Ultimately, the VAT is paid by consumers. Those people, the final buyer of goods and services, are the payers of the VAT. Okay, but once again, we don't go from Pick n Pay to SARS and say, listen, I just bought stuff at Pick n Pay, here's my VAT. We pay the VAT to Pick n Pay. Pick n Pay is the intermediary. They will collect all the VAT from the consumers and they will take the VAT and pay it over to SARS. But again, it's not Pick n Pay paying the tax. We as consumers pay the tax to Pick n Pay. Pick n Pay is just the collecting agency. They collect the tax and they pay it over to SARS. It is the consumer that actually physically has to pay the tax. Okay, right. Now we get 3 different tax scales. Okay, the tax scales is what we use to calculate how much tax must be paid. Okay, we get a proportional tax scale, a progressive tax scale, and a regressive tax scale. Okay, a proportional tax scale means that the percentage of tax that is paid is the same for everybody, regardless of their level of income. All right, so it doesn't matter how much you earn, what your income is, everybody pays the same percentage of tax. All right, a proportional tax scale is used in many developing countries because it's easier to administer. Okay, there's no different tax scales, everybody just pays like 20%. Now it's easy to calculate. All right, everybody pays the same regardless of how much they earn. Then we have the progressive tax scale. That is the one that we use. A progressive tax scale means that people that earn higher income pays a higher percentage tax. All right, so higher tax percentage is levied on higher income groups. The more you earn, the more you pay. Okay, our income tax is progressive. That's why it's called pay as you earn. The more you earn, the more you pay. All right, then a regressive tax scale means that higher percentage taxes is paid by lower income groups. So in other words, the less you earn, the more tax you pay. This is used nowhere in the world because obviously this is unfair. All right, it's unfair to take from the poor and give to the rich. All right, so that's used not anywhere. All right, that's your taxes. All right, so taxes was the first source of income to the government. The second source of income is loans, right? We already said when the government's revenue is not enough to cover their expenses, so once they've calculated how much revenue they expect to earn, then and they know how much they need to spend, obviously there's a shortage which we call the budget deficit. There's a deficit on the budget if the government expenditure is higher than their income. And I've said many times already, you cannot spend money that you don't have. So obviously when the government plans on spending more than what they are earning, they obviously have a shortage of funds, so they need to borrow. Just like normal people will borrow money, the government can also borrow money to finance that deficit. All right, so obviously their loans can take different forms. Okay, we have our special drawing rights at the IMF that we use for our balance of payments deficit as well. Also, we can borrow money from the World Bank. The government can borrow money from any normal bank, okay, Nedbank, ABSA, any bank. The government can also borrow money from other countries. Those countries with surpluses, with extra funds, can also lend money to countries that have deficits. All right, just remember, loans is a source of income, yes, but ultimately it has to be repaid. All right, so it's not a great source of income. It's not one that you want to use too often. Right, then the next source of income for the government is their government property. Okay, we have already spoken about privatization as well. Right, so obviously the government owns certain properties. Okay, there's certain properties that they can rent out like any other person. Any person that owns a property, an office building, can rent it out to tenants and earn income like that, right? So if the government owns property that they are renting it out to businesses or individuals, the rent income that they receive there, like for any other person, is also an income to them. Okay, they also receive profit from forestry and mining, okay, where they have like interests in the forestry and mining industries. A lot of the forestry companies in South Africa is actually it belongs to the government, right? So any parastatal that actually does make a profit, would also be government property, except that in our country that doesn't really happen. All right. And then obviously when they do privatize, if they do sell off their properties to private individuals, any income that they earn in that way will also be a source of income, right? If they were to sell SAA, for example, any money that they receive, not anybody in their right mind would buy SAA, but if they would be able to find a willing buyer that is willing to give them a couple of million for SAA, that would be income for the government. Right. A small source of government revenue also is administrative income. Okay, remember we spoke yesterday that municipalities and provinces can also create their own income. Most of that income would be administrative income. The money that we pay for traffic fines, if you are caught speeding and you have to pay a traffic fine, that is administrative income. Licenses, your driver's license that you pay for every 5 years, that is administrative income to the government. If you lose your ID and you have to apply for a new ID, you pay for that. That is administrative income. The car license, administrative income. All right. Any interest that they receive, if they have investments that they have made, interest received on those investments would also be administrative income. All right. And then the second last one is transfer payments. Obviously from other countries, international organizations, if the World Health Organization were to give us money, for example, a donation in order to deal with the coronavirus, that'll be a transfer payment. Okay, now South Africa, we don't get a lot of this because we are not as poor as other countries. So we don't really qualify for foreign aid all of that much, but we do receive some. Okay, the last one, and also a very small one, is donations. Okay, this is where private people or private businesses give as gifts to the government. All right. For example, now with the coronavirus, all those wealthy people, I think Patrick Motsepe gave money, and yes, who's those other, the Rupert family, the Oppenheimers, that was donations. All of them gave like 1 billion rand or 1 billion rand here, whatever, to the government in order to help with the coronavirus. That would be a donation. All right. And as I said in that last point there, it's normally given for a specific purpose. Okay, so like those wealthy people now that each donated $1 million, it was donated specifically for the coronavirus, to deal with the fallout from the coronavirus, to help businesses survive this period, etc., etc. All right. Just FYI also, when people die and they didn't have a will, if you die, obviously you have a will to say that your dog Fluffy will get the blanket and your mother gets your money and your sister gets nothing, etc., etc., right? Now, anybody that dies without a will and the manager of your estate cannot find close family, right? They do their research, they are unable to find a family member to give your stuff to, automatically your stuff is going to be donated to the government. All right. So if you don't want to donate your money to the government, make a will. All right. The last component of the fiscal policy is the budget deficit. All right. As I said, we have a budget deficit if the government plans on spending more money than the income that they are going to receive. All right. So if they spend more than what they earn, that is known as the budget deficit. And as I mentioned already, to make up for the shortfall, you can't spend money you don't have. So the government must either borrow the money from domestic sources or they can borrow from international markets. All right. Obviously, I said they can borrow money domestically from our normal banks, any bank. The government can get a loan from any bank, or international markets like the IMF, like the World Bank, from banks from other countries, wherever, other countries that is willing to lend their money. That will be your international sources. All right. The disadvantage of borrowing is that it increases public debt. All right. And the more debt the government has, the higher the interest burden becomes as well. All right. So the government also must pay interest on just like we do on all the money that they borrow. And the more debt the government has, the higher that interest burden becomes. And then remember, in the budget, they first take out that top slice. Before they start dishing out the money for other purposes, they have to take out the top slice. And that top slice is the money that they need to use to repay the government debts of the past plus the interest. So the more debts and the more interest the government has that they have to pay back, the less money stays in that budget for other spending categories. So the more money they take out to pay their debts and the interest, the less money is available for education and for healthcare and the police force and whatever. All right. Now, when a country has a small national debt, that indicates that government spending was done responsibly. Responsible government spending means that you don't overspend. The government is not going to spend more than what they are earning, and therefore they will not have a deficit, so they don't need to borrow. All right. However, when there's high unemployment in a country and low economic growth, which is what we are facing right now, the government will want to stimulate the economy by spending more. Okay, this whole lockdown situation in our country means that the government now has to spend more on UIF. There's businesses are going to close down. If they don't earn an income, they cannot survive. Unemployment is going to increase. If you've been listening to the news, if you've been reading, on the internet or whatever, the situation for our country is bleak. All right. Some economists is even predicting that we are going to have a negative growth rate of over 25%, a minus 24%. So our economy is going to contract by 25%. Okay, that's the worst one I've seen. Most of them says we are going to contract like 6%, 7%, 10% or whatever. Okay, it's still a contraction, right? Unemployment is going to decrease. Our economy is in a recession. We are heading for a depression if we're not careful, right? Which is going to happen, okay? So obviously, if they do not want to increase taxes, which they can't right now, consumers are taking strain, people are not having an income, they cannot increase taxes right now. Obviously, they need to spend money on stimulating our economy to try and keep the economy alive. So in a case like that, obviously it necessitates for them to be borrowing money. Okay, so our public debt is definitely going to increase over the next year, 2 years, whatever, because we are having to deal with this crisis. All right. I'm going to stop here because this is already like a 50-minute lesson and I think you are bored now. So the effects of fiscal policy measures, that is also a very important section. I'm going to record that lesson tomorrow and then I'll send it to you tomorrow. All right. So officially this is all I'm sending for you for today. Okay. Enjoy the rest of the day.